Hi guys, it's Ariel
And Jason.
from Fix My Books, and today we're here with another video about things that you need to know before you sign a tax return.
Yeah, so we wanted to do this one after a long tax season. Oh, we're sorry we haven't uploaded any videos because we've just been inundated with work because it was tax season. And yeah, we're exhausted.
Yeah.
But we wanted to make this because we're seeing just in the news more and more people are struggling to even file their tax returns. They're not paying their balance owed. They're getting surprised at the fact that they owe money to the CRA, and they're not really aware of the ramifications of what happens when you owe money to the CRA or if you file a bad return or anything like that.
And it seems like they don't think that they can get into any trouble if they file a wrong return and like someone else filed it for them. They think they can just but someone else filed it. So
they think that the blame lies with the person that filed it for them, when in reality that's not the case. But we'll get into all this.
Yeah. So can you get into trouble if there are errors in the tax return? Yes, you can get into trouble.
Yeah, so you don't need to watch the yes.
Okay, so let's get started. Okay, so there are legal repercussions when you sign a tax return, whether it's correct or incorrect. There are legal repercussions once you sign one.
And we'll get into each of these individually, but we'll just run through them at a high level here. So personal responsibility, yes, you will have personal responsibility. There can be penalties and interest that you can be charged. Criminal charges can be brought against you, especially if there's issues like tax evasion. You can sort of circumvent this by doing a voluntary disclosure program, and there are such things as statute of limitations. So you probably hear on Law and Order, statute of limitations. Well, this applies to tax returns too.
Okay, so first things first, personal responsibility. So as the taxpayer, you are personally responsible for ensuring that all information on the tax return is accurate and complete, even if a CPA or tax preparer prepared it.
Yes,
so even if a CPA or tax preparer prepared it. Okay, guys, just understand that.
So when you sign a tax return, in America they understand this concept quite a bit, but it's a bit different in Canada. On the tax return, in the place that you sign, there is something called a jurat, where it states that you are liable for what is in the tax return. A lot of people don't read these things because, the tax returns look complicated and boring, and, there's all these boxes everywhere and numbers, and it's not like something how you want to spend your day looking at it. But just above where you sign, there is this disclosure you are making, so that you are liable for this. So when you sign it, it is a legal document that you are signing. So that's why we always explain the tax return to people. We always go through it and we explain the ramifications of signing it.
Other people may not do that.
Other people may not do that with you. Obviously, if you're doing your return on TurboTax isn't doing it because no one's explaining it to you. You're just submitting it and pressing enter. But just be aware of that because you are signing a legal document.
Just because someone else prepared it for you doesn't mean you're absolved of
any responsibility. Yeah. I mean, we'll get into the last part of this where, there are preparer penalties, but at the end of the day, you're still going to be liable for the information that's in the return, whether or not it's misstated and, the amounts in there, are they correct? Are they all declared?
And there are different types of errors. So for example, right, you could be underreporting income.
So basically, you've got $100,000 in income, but you only told the CRA you got 50.
Yeah. I mean, it could go both ways. Let's say if you worked for multiple companies throughout the year, you provided, let's say 2 or 3 T4s to your tax preparer. They missed one, and it underreported your
and it didn't show up in the AFR, so the autofill my return download from the CRA.
So then you will be underreporting income, even if you provided it to your tax preparer. So in that case, that's your tax preparer's fault. So there are penalties for making mistakes like that.
But also it is your fault still.
Yeah, exactly. Because you have to, that's why they make you sign it. So you're supposed to review it, guys, before you sign it. Don't just like, oh, sign here, sign here. I know, like, it's fun to just click
on PandaDoc,
yeah, or like Adobe Sign or whatever.
Just click all the way through.
Yeah, but just like double check the numbers in there.
So also, when we do a return, what we will do is make you sign on pages that we actually, when we go through it, we will say, we'll go through the whole return, but we'll also have a signature on pages where we really think you should stop and look at this, right? Yeah. Even though there's no signature required on that page, and it doesn't do anything for us. It's just simply read this page.
Yeah. And then another thing is if you're claiming false deductions, let's say you're claiming that you have a child when you don't,
claiming your dog
as a dependent. You cannot do that.
I know the IRS actually had to tweet about this, where they had to tell people, please stop trying to claim your dog as a dependent.
Yeah, I know they are family members and we love our dog, but
he is not a dependent. He is a dog.
Sadly, no. Or if you provide incorrect information, so let's say you are single and you're like trying to say that, oh, I'm married or something because you wanted to claim,
double the Canada carbon rebate or whatever it is.
Exactly. So just know that those are things that you will be liable for. So you can see in the Income Tax Act, subsection 163, subsection 2, false statements or omissions. So if a taxpayer knowingly or under circumstances amounting to gross negligence makes a false statement or omission in a return, they are liable for a penalty. This penalty is greater of $100 or 50% of the understated tax or overstated credits.
So it's obviously going to get high very fast because it's 50%. That's quite a high penalty.
Yeah. Gross negligence, guys. You really cannot just be like, oh, but someone else like did. It's like, what? Well, you were negligent. You didn't read the tax return.
You didn't read it, right?
Right. So, and again, there are third-party preparer penalties for this.
We'll just get into this in another video because it's quite long. But yes, you can get penalties assigned to someone that's done a tax return wrong, so misrepresentation by a third party, and essentially they filed a false return or they helped submit a false tax return. You do see this on the CRA website. So there is a section of the CRA tax tips website, I think it is, and it's news and updates. And they do have a section which is purely dedicated to cases that are going through. So sometimes you see some like crazy cases where someone was, what was one? They were falsely declaring GST credits. They have millions of dollars in GST credits.
I think the U.S. has one too, like people under review. Like you showed me a list before.
So when it comes to the CRA, everything is sort of amalgamated together, where you've got these people filing wrong stuff, but then you've also got the preparers doing the wrong thing, or some CPAs or lawyers doing the wrong thing, and that's all together. But with the IRS, they have a special one which is totally different, done by the RPO, which is the Return Preparer's Office, and it's just a list of people that are now disbarred from practicing. So a lot of CPAs, a lot of lawyers, a lot of EEAs, so enrolled agents, being disbarred from practice because they are filing grossly misstated stuff or they're involved in a crime. That's the thing.
Hey, next. Okay, penalties and interest.
So subsection 1631, penalty for failure to file. So this is when you just don't file your tax return. If a taxpayer fails to file a return as and when required, a penalty of 5% of the unpaid tax can be imposed, plus an additional 1% for each full month the return is late up to 12 months. So as you can see, this can sort of add up quite quickly, because eventually they're going to send you a demand to file, which is the next one, and the penalty of 10% of the unpaid tax imposed plus an additional 2% for each full month the return is late.
This is only applicable if they haven't demanded that you file yet. Once you get a demand to file, the penalties goes up.
So
right?
and it gets high quite quickly. So
yeah,
if you're getting the demand notice, just file the return.
yeah,
You know, and when you get these things, don't ignore them. That's the worst thing you can do, because it will not go away. Because the thing I want to explain with this is, once the procedure has begun,
it cannot be stopped.
It can't be stopped unless you stop it.
Meaning you just comply.
Meaning the onus of responsibility to deal with this is totally on you. Otherwise, it just gets worse and worse and worse. They don't go away simply because, you know, you forgot to file. You know, that just starts a procedure, right? And it's a government bureaucratic thing where it's on one layer and then the next layer and the next layer and so on and so forth.
Yeah. Gosh, like we could tell you so many stories of penalties and interest with some people, because we do get a lot of clients that they come to us once it's at this point.
Yeah, once they're getting the demand to file, they're coming to you at that point.
Yeah.
Now, we don't really get penalties and interest waived very often. It's usually
very limited.
It's very rare, and it would need to be done as in. It would usually only be done if there's like some sort of error on part of the CRA, so they've made a mistake,
or
someone has passed away, or all the penalties and interest are going to cause you very serious undue harm,
like you would have to declare bankruptcy or something like that.
Yeah, so it's the worst possible scenario. It's not just because they're inconvenient to pay.
Yeah. Okay.
So interest on unpaid taxes accrues from the date the taxes were originally due until the amount is paid. So this is why sometimes when a return is filed,
even if it's paid on time,
oh no, I've got a great example of this. So because you've got the June 15 date for a T1, T2, 125, right? A small business is filing a T2, 125. The due date is June 15, but your due date for payment is April 30, right? Given if it's not some random day in the year.
So if you pay it on June 15, you're technically...
Yeah, you're still late. And that's why when you pay it and you get the notice you file it, you get the notice of assessment, it's got accrued interest there already. And people are wondering, why do I have to pay that? I mean, this happens with a lot of new business owners because they think they get this June 15 extension. It's like, no, it's a June 15 extension of file. It isn't to pay. They're two different things.
Oh, and my favorite, installment payment. So when people pay on April 30th and they're like, why do I have interest, right? I paid in full. I paid on April 30th. It's because you didn't make the installment payments that they wanted quarterly throughout the year.
Last year when you filed your tax return and you signed it, in that tax return, which should have been explained to you by your preparer or your CPA, was an installment agreement. This is an actual legal agreement with the CRA that if you have taxes owing, you will be prepaying these taxes in installments. Right? So when you don't pay those and then you pay them in full in the next year, because you didn't stick to the agreement when those taxes were due, they've now accrued interest.
Yep. Hi.
So this one's pretty heavy, but it will lighten up after this. But criminal charges for tax evasion. So subsection 2391, offences and punishment.
Okay. In cases of significant underreporting or fraudulent activity, a taxpayer could face criminal charges for tax evasion. Conviction can lead to severe penalties, including fines up to 200% of the tax evaded and imprisonment for up to 5 years.
So just don't mess around.
Yeah.
There's no messing around with this. Don't get into this situation ever. Don't even think about doing it. There's no amount of money that's worth 5 years of your life.
Yeah. I mean, to be honest, I personally haven't heard of anyone going to jail
I have
over...
because I read the website.
Oh,
so,
really?
Yeah.
Like, I don't know anyone going to jail, but like obviously like penalties, yes. But
most of the time, this is centered around GST stuff that I see on the CRA site. But yeah, a lot of the time it's GST related.
Oh, okay. So yeah, guys, just don't mess around. Hi, next.
So
You can
voluntary
take this.
disclosure program. So it's called the VDP, and this is if you want to correct any sort of errors that you've had on a tax return or that you know that you've had on a tax return, and you want to not be persecuted for it. So, the last couple of slides. Now with this, make sure that if you are trying to do a VDP, you don't try to do this when you're already under audit. It doesn't work that way. So it's voluntary. So
if you think voluntary means you got a letter and you're like,
now
now I will volunteer, it's
now,
like, no.
Now you're in trouble.
No.
Right? No, it doesn't work that way. So if you're already under audit or investigation, the VDP is not going to work for you.
Okay, and you must meet all 5 conditions to be able to do the VDP.
Yeah,
Okay.
So on the right-hand side, we took the conditions from the CRA just so you can have a read of them. So you've got to submit your voluntary application before being the key word, the CRA takes any enforcement action against you. Also, you need to sort of file everything. So everything needs to be up to date. You must include all relevant information and documentation there.
Yeah. So I know this is kind of like heavy a bit. It's not one of our like the fun topics, but just know that the reason we are making this video is because I think a lot of people are misguided in terms
of whether or not they can get in trouble.
Yeah.
But also, we saw a statistic, I can't remember it for the life of me, but there was a statistic that came out that said, several million people didn't file this year. And it's not that we're telling you to file with us. No, not at all. We just want you to be aware of the ramifications of not filing.
Yeah.
It's better to owe money to the CRA, call them, come up with a payment plan, work it off, just do it the correct way, rather than thinking, I'm not going to file, I'm just going to ignore this, because we 100% guarantee that it gets worse.
Yeah.
So just don't ignore it. And
at least if you file and like make a payment plan and stuff like that, there's something called like good faith that you are trying to, like that will, I will say, score you brownie points with them.
It does go a long way because they're tired of people just not filing, right? And then they have to remind them to file and then start these enforcement actions. They don't get joy out of having to do this. I don't think they do. They're just regular human beings, and they're just regular people just wanting to, get on with their job. And the more you roadblock them in doing their job, the heavier that they have to get using the laws that are available to them. So we got the next one here, which is statute of limitations, which is why we're saying just file the return, right? Because once you file the return, and yes, make sure it's accurate, the statute of limitations starts running. And what that is like what we said, it's the whole law and order thing where you've got a statute of limitations where, the clock starts running before they can't do anything about the return anymore.
Yeah, so it's just think of it as like an hourglass. You're like waiting it out. So once you're done with I think it's around 3 years from the original date of notice of assessment.
But if it's not like a CPCC, so
it's a different
Canadian corporation, it's like 4 years. But the reason we say file the return is so the statute runs on it and there's less issues down the track.
However, if there is negligence, misrepresentation, or fraud, like the 3-year thing is like waived. They can like review you forever.
And if you don't file the return, the statute of limitations
does
never
not
start.
Yeah.
So file the return.
Okay. Also, just note that non-residents and non-resident corporations, different rules apply to them, and the reassessment period can be longer. So you guys should check this if that's your situation.
Also, we're seeing a lot of people leave Canada at the moment, obviously because of cost of living, etc., and their own personal circumstance. But if you're leaving, just file your final tax return. You may not be able to e-file it. You'll likely have to do like a paper-based return and send it in. But please make sure you file that return, because the last thing you want is to have a tax debt owing in Canada, and then if you ever have to re-enter Canada, you're going to run into issues.
Yeah, and make sure that if you are planning to leave, like, you wrap things up correctly.
You close things off correctly, and you do an immigrant return, and you're leaving and it closes off. And
because the last thing you want is like they're gonna say, "Oh no, you were still a tax resident. Like, you owe us money." Like, you don't want that happening. So like, if you are planning on doing that, please make sure you consult with a tax professional. This is the last thing you want to mess with, where you owe money in like 2 countries.
Yeah, if you're just worried about dealing with the exit tax and that kind of thing, just get it done, right? Because it's way worse if you come back into the country later. If you're a citizen that's leaving, and then you're leaving sort of permanently, but then you come back and you're going to run into legal issues, and it's the last thing you want to deal with. Like, if you're just coming to see, a relative that's dying, or you're going to a funeral, or you're going to a wedding or something like that.
Yeah, that would suck. So that's it, guys. We have links down below in the description box with everything that we've mentioned, all these like subsections, stuff like that you can check out as well. So I hope this really gives you clarity as to, the consequences or like the ramifications of signing a tax return, how long they can reassess you after you get your notice of assessment and things like that. And I really hope this just provides you guys some clarity. We know taxes is not a very important issue for most people. It's like cleaning a toilet. You don't want to do it, but you gotta do it. So
yeah, it's just part of life.
Yeah. So if you guys have any questions, please comment them down below. And once again, this is Arielle
and Jason
from Fix My Books. Have a great day.
Cheers.